with commercial property, what are the types of risks that investors ought to be aware of before they go too much further with it?
Well, it is quite different to residential. Generally, if you've got a residential property in a good area and it's clean and tidy, you won't have problems getting tenants. In both residential and commercial, your biggest risk, not having a tenant.
Yep.
You lose your income. But you can cover yourself by putting certain clauses in the lease, getting what we call bank bonds or bank guarantees. In the past, it has been personal guarantees, but they're very, very hard to enforce these days. Most people have their personal assets tied up in trusts, and they're generally quite hard to get to. So what Jack and I do is, with most of our new leases, we prefer to have a bank bond in place.
How does a bank bond work?
Bank bond is basically in favour of the landlord. So it's a document that's provided for by the bank of the tenant, right, which stipulates it's in favour of and states the name of the landlord. So if it's one of us or our business or our property fund, it's got that property fund. And we get the document from their bank stipulating that this is the bank bond and the amount is, generally speaking, it's 6 to 12 months of the rent. So depending on what's been negotiated in the lease, and that sits in the landlord's favour. And what that means is that if the tenant ever defaults on rent or is late on rent, then we can activate that bank bond, which means we can go to that bank based on that certificate and claim that amount of money.
I see.
So the way the tenant sets it up is basically it's a facility that's ready there based on maybe some assets that they own, but it's in favour of the landlord. So if they're say having a bad couple of months, business isn't going that well, and they skip a payment in rent, Jack and I can just phone the bank and say, hey, we want to activate the bank bond, and pretty quickly the rent turns up. So if something really bad happens, we know that we've got 12 months of rent prepaid, and that gives us time to find a tenant. So it removes that risk of having a vacancy.
Good.
Yeah.
And I guess it's not too different from tenancy services where you'd pay a bond if you were a tenant, right?
Yeah.
Except it's much larger here, and it's not operated by a separate organization. It's operated effectively by your bank, the custodian of that money.
You can do it in a way where you have a cash bond as well. So that's a cash bond which the tenants do pay up front, which sits in the landlord's account, essentially. Okay. So that's the other way to do it. Generally speaking, you probably wouldn't get 12 months in advance for a cash bond. You might get 6 months. We've got a few in our portfolio that are 4 and 6 months of cash bond rather than a bank guarantee. So rather than setting up that facility.
What would be some of the other risks apart from the tenant not paying the rent?
Yeah.
What like vacancy, I think would be the next biggest one that I would think about.
Absolutely, the vacancy risk.
Yeah.
That's your biggest. So, and I mean the way to mitigate that is, well, you've got your tenant. If the tenant is really in default and you've got to change the locks and remove the tenant. We like to think a lot of the properties we look at or that we invest, we look at industrial that's in really good areas. So areas that are high demand with low vacancy. So that means that it gives us the ability, should a property go vacant, the tenant leave for whatever reason, or the tenant just wants it, comes up to renewal, doesn't want to exercise the renewal. That's the other thing, is they've got to give at least 3 months in the standard Auckland District Law Society lease to renew the lease. So generally speaking, you will get 3 months notice. And we have really good relationships with our tenant, and the new Auckland District Law Society leases provide that they've got to give more notice now. So 6 months notice. So you've got 6 months notice that, hey, what are you doing to renew the lease? Okay. And if they're going to leave, you've got 6 months to find a new tenant. And generally speaking, the areas our properties are in, which we do a lot of due diligence on, and the type of properties we've got are actually quite high demand.
We're very, very strict in the areas that we invest in, and they're always high demand. So we very, very rarely have a vacancy, and there's maybe, I think the longest we've had is a few weeks in between tenants, changing tenants, and quite often Jack has them moving in, shifting out on the same day, which can cause problems because he doesn't like vacancy.
No, that's good, but and it makes sense, right? Like I guess you always want to get return on your investment, and vacancy feels like the biggest threat.
It is, yeah,
and it feels also like, because it's kind of linked to the business cycle, the economy, certain periods of time probably represent higher risk than others, but it sounds like the way that you mitigate that risk is by choosing location. You mentioned the bonds before as well. So you kind of are buying buildings in areas where you know that if they can't perform, chances are somebody else in the area might.
Yes.